What's up, guys? Welcome back to another live stream. I should be online already. There you go. Hello, Leslie, Baby Joker. What's up, guys? Alec 347. How are you doing today? Please drop a comment down below. Let me know what stocks you guys want me to go over. Sorry. In the meantime, I am going to make a summary of what happened today in the markets. Another red day almost across the board because the Russell 2000 was able to pull off a tiny green day. It went up 0.14%. And let me know if you have any questions. XOM, Apple, Square. Hello, Colby. Scott7, Tessie. That's a classic stock of our live streams. Absolutely. I will go over all of those stocks. Richard, Swaby, SPY, yes. I have some interesting information that I want to show you guys about the SPY. Nvda, okay, yeah. So let's get started. Um, Another red day, almost across the board, guys. So I just told you the Russell 2000 went up today 0.14%. The Nasdaq went down 0.12%. The Dow went down. It pretty much broke even. We can make the case it went down 0.03%. It dropped only 9 points, nothing crazy, and the S&P went down 0.13%. If we take a look at the sectors of the markets, I always told you guys about the sectors. Take a look. Most of them closed in the red. We had one, two, three, four, five, six, 7 sectors out of 11 closing in negative territory. But keep in mind that tomorrow we have the jobs report of September coming out at 8:30 a.m. Eastern Standard Time. That is going to that report is very likely to move the tape, either up or down. So yeah, if the report happens to come out either very overheated or way below estimates, we are very likely to see another red day, maybe the SPY dropping below 419 bucks, $420. Or if the report happens to come out exactly as expected, I have suspicions that the bulls are going to be able to make the most of it. So, and I don't want to talk. You guys know that I don't like talking. I don't like discussing macro stuff over here. So I don't want to go over the details of the report itself. We don't care about whatever the cooks of the Bureau are going to be delivering tomorrow at 8:30 a.m. Eastern Standard Time. What we do care about is the price action. If the price action is negative, then we need to be mindful about the most important areas from a support standpoint that we need to keep an eye on. And if the price action or if the reaction of the markets happens to be positive, we need to know what are the areas of interest from a resistance standpoint that we need to keep an eye on. If you ask me, guys, what do I think? What is my hunch when it comes to the jobs report that comes out tomorrow? I'm thinking that the reaction of the markets is going to be favorable. So I'm thinking that the cooks of the Bureau are going to be delivering the report pretty much as expected. And if that were the case, I think that we are going higher. And mind you, this is also my opinion. This is my personal opinion, and the price action is gonna let us know whatever we are going to be doing tomorrow. If the report comes out just as expected, as I am suspecting that it is actually going to be the case, if they push the tape higher tomorrow, I think that uh, the RIP is very likely to end up being sold. So we might see another gap and crap. But when it comes to the initial reaction to the report, I think that the reaction is going to be very positive. There is another metric, which happens to be the average hourly earnings, which is also very important. But as I just told you, I will be letting you guys know on Discord tomorrow the areas of interest that you need to keep in mind in order to trade the tape. There you go. Red except for Lily, just to spite me because I am in a put. I actually wanted to buy the dip on Lily today, Leslie. Eli Lily. But the short, I needed Lily to burst above the 5-day moving average, but will go over Lily, so don't worry about it. So, long story short, guys, today we didn't have a positive day, even though we can make the case, guys, that the closing of the trading session wasn't negative, because take a look at this, guys. So the SPY dropped pretty much until noon. They found support at 421 bucks, and then they started to push the tape higher. And take a look at this white line, guys. If you have been listening and if you guys have been watching my live streams, you know that I use a lot, and I mean a lot, the 5-day moving average. So this white line that you guys can see over here is none other than the 5-day moving average. Take a look at how many times the SPY failed right at this 5-day moving average. Pre-market, they failed over there. Then as soon as the trading session opened, they failed once again right at the 5-day moving average. Then they failed a bit before the closing bell at 2:37 p.m. And then they failed once again at 5:05 p.m. So this is extremely important. I have been telling you that I use the 5-day moving average in order to determine who is in charge of any technical chart from a minor time frames standpoint. So I am going to pull up here a 4-hour chart of the SPY so I can explain this further. Let me zoom in here. This white line that you guys can see over here is the 5-day moving average. As of now, this line is downward sloping. But on the flip side, we still can see over here an upward sloping 100-day moving average and also an upward sloping 200-day moving average. So this implies that in major time frames, the tape is still under the control of buyers. Is still under the control of the bulls. However, in minor time frames, the sellers have been making a ton of progress. Why do I say that? Because we have a downward sloping 20-day moving average, which happens to be this pink line that you guys can see over here. We can also see over here a downward sloping 5-day moving average, and the bears were already able to break to the downside the 100-day moving average. And today, as you guys can notice over here, they failed on 4 occasions trying to burst above this 5-day moving average. So this is going to be the main task for the bulls tomorrow. Let me zoom in here once again on the 4-hour chart. If you guys happen to see the SPY trading above 425 bucks, that's bullish behavior. Okay, because that implies that the bulls were able to recapture this once again 5-day moving average. So the main, let's say, gap to the upside that we need to keep an eye on in tomorrow's trading session is going to be up to $429. Keep in mind that the SPY went down today 0.04% and that it closed the trading session at $424.50. So let's say that the reaction of the markets is positive to whatever the jobs report states tomorrow at 8:30 a.m. If they push the tape higher, $429 is a spot in which they should at least provide, it is a spot from which they should provide at least a little retracement. 429 bucks happens to be a previous support back from late September, and this is an area in which they failed, in which the bulls, that is, failed on multiple occasions in June. Sorry about that. I didn't mean to zoom in. So 429 bucks is a spot in which from which I am going to be expecting some sort of retracement tomorrow. Um, if they open the trading session below this 5-day moving average, so let's say that they open below 425 bucks ish, then I have 2 potential supports to the downside. The first one, $422.70. I was telling you guys on Discord today about this level. $422.70 happens to be a previous support back from September 27th. And this is also a previous resistance back from May 30th. So this is a very easily identifiable technical area in which the bulls, in case that they are retracing, this is a place in which the bulls are likely to be able to put on a good fight against the bears. If this support happens to be broken to the downside, guys, we pretty much have over here the 200-day moving average, which I just told you that this moving average is upward sloping. This is a good sign for the bulls. This implies that this moving average is it is very likely to keep acting as support as long as it is upward sloping. And take a look at what happened, guys. We had a test, or we saw a test of this upward sloping 200-day moving average yesterday, pre-market, at 419 bucks. And guess what? This moving average actually provided a good support, and the bulls were able to bounce back up from this area. So this is going to be pretty much the very last line of defense for the bulls, 419 bucks. If this 200-day moving average happens to be broken to the downside at around 419 bucks, then the tape is going to turn into something absolutely different. So the SPY is going to be is going to start to reflect a major downtrend in most of the charts. So this would imply a different kind of worms, but we will address that if that were the case on a timely manner. So I also wanted to show you guys a an anchored volume weighted average price. Take a look at this. So I drew this AVWAP, this anchored volume weighted average price for Monday. And as of now, I got this level, $423.60. The bulls were able to close the trading session today above that area. So that's encouraging for the bulls. So in case, guys, that 425 bucks happens to be broken to the downside, we're ready. Or let's say that not broken to the downside because the bulls actually closed the trading session today below 425 bucks. If the bulls open the trading session below 425 bucks and they start to retrace, then this is another area of interest. Okay, again, this is an anchored volume weighted average price that comes from Monday at around $423.60 ish. So these are the levels that I am going to be monitoring tomorrow. Sorry, guys. And you rest assured, guys, or don't worry about it. I am telling you guys the levels of the SPY because you're asking about the SPY. I am going to be very active on Discord until noon, by the way, because tomorrow I am moving out, guys. So I am going to be active until noon approximately. And for the most part, you know that this is a morning business, so you will be provided the necessary information in order to trade the tape until noon, at least tomorrow. Okay, so before we go over some stocks, I wanted to point out important stuff from a mechanical standpoint that you need to keep in mind, that you need to keep an eye on. Excuse me, guys. I have been telling you guys about the US dollar, the Dixie, and about the 10-year Treasury yield. For the most part, guys, the reason why the markets have been dropping like a rock is yields. And in the case of Treasury yields, we use TNX. T as in, I don't know, Trey, N as in Norway, and X as in, I don't know, X-Men. Okay. If you remember, I told you last week that for the markets, in order to be able to catch a break, we needed to see a pullback of TNX, the 10-year Treasury yield. So if we take a look at a 4-hour chart of TNX, of the 10-year Treasury yield, what do we see over here, guys? A very clear and neat uptrend. Upward sloping 200-day moving average, upward sloping 100-day moving average, upward sloping 20-day moving average, and also, of course, an upward sloping 5-day moving average. So put this down on a sticky note. The 5-day moving average, as of now, is signaling 4.69%. Okay, or let's say 46.90. Okay, when it comes to TNX, if this 5-day moving average happens to be broken to the downside, so if you see TNX trading below 46.94, or 4.69%, this is a very good sign for the bulls. This implies that maybe the 10-year Treasury yield could be heading down to 4.50% or 45.09. If this retracement, sorry guys, happens to occur, okay, this is going to be very beneficial for most of the stocks that you guys love trading. The Nvidias of the world, the Apples of the world, the Teslas of the world, and so forth. However, if tomorrow you guys want to buy some calls and stuff like that, and by the way, keep in mind that both TNX and the Dixie are going to be moving depending on whatever the jobs report states. Okay, so if the report happens to come out, let's say way overheated or way below estimates, then the 10-year Treasury yield is going to, if the report happens to come out way below estimates, the 10-year Treasury yield or TNX is very likely to drop. But it is going to be dropping by, or let's say it is going to be dropping because of the wrong reasons. And I don't wanna tell you much about that, but um, if the report comes out as expected, the 10-year Treasury yield or TNX is also very likely to drop. But if that were the case, TNX would be dropping because of the right reasons. That would imply that the jobs market is slowing down in a, let's say, with order. Let's just put it that way. And that implies that maybe the Federal Reserve isn't going to be hiking rates in the next Federal Open Market Meeting with the Federal Open Market Committee that is taking place in November and so forth. So that's macro stuff that I don't want to talk about here. But mind you, if TNX breaks this support again at around 4.70% with a jobs report that comes out as expected, this is very bullish. This implies that the stocks that you guys love trading, as I just told you, the Nvidias of the world, the Apples of the world, and so forth, are going to be going higher. Okay. On the flip side, if the jobs report happens to come out overheated, reflecting like many more jobs than expected and stuff like that, and reflecting an hourly earnings reading way above estimates, way above estimates, that implies that the reaction of yields is going to be to the upside. And I have been telling you guys that treasury yields at these levels and in the current situation are inversely correlated to most of the stocks out there. Okay, the tech stocks and the higher multiple stocks and most of the stocks that you guys trade. So this is going to be a protagonist in tomorrow's training session. Um, Again, the report comes out as expected, and I will be telling you guys what the report was looking like on Discord. If that is the case, TNX breaks the support of 4.69%. That is going to be very beneficial for the bulls. So this could be signaling that we are going to see a very positive day tomorrow. We will see if the RIP ends up being sold, but that's another story. On the flip side, guys, we have the US dollar, the Dixie. Let me pull up here the DIX, the US dollar. It is pulling back. And obviously, the DIX is going to be moving a lot depending on what happens tomorrow. And the reading when it comes to the Dixie relative to the 10-year Treasury yield is going to be pretty much the same. So the report comes out overheated. The DIX is going to shoot up higher. And that is going to be putting downwards pressure from a mechanical standpoint over most of the stocks out there. The report comes out as expected, which I think that that might be the case. The Dixie might keep dropping, and let's say the Dixie closed today at 106.34. Let's say that the Dixie drops down further, and it drops down to 105.58. This is a previous support back from late September. This is going to be very, but very important for the bulls. So you guys need to get familiar with the mechanics of the markets, with the mechanical aspects, or with the mechanical aspects of the markets. Okay, these two indicators, both the Dixie, the U.S. dollar, and the 10-year Treasury yield, move the markets a lot. So before taking trades, I mean, if you want to buy either calls or puts, I strongly recommend to you guys knowing what these indicators are doing and how these indicators might be affecting the trades that you're about to start. If you have any questions about these, the Dixie and the and TNX, please let me know. But you should get familiar with this, with these two indicators, because you guys are for the most part, taking day trades and gambling on 0 day to expiration and stuff like that. So you'd better get familiar with this. This is going to be These two indicators are going to be moving the tape tomorrow for sure. So let's start with the stocks that you guys are asking. I have a bunch of requests over here. Long story short, okay. Nvda. Let's get started with Nvda, guys. Okay. So it went up today 1.47%. By the way, guys, I wanted to show you this. This caught my eye earlier on today. Take a look at the market structure of Nvidia, guys. Super, super positive. Last time I checked. Remember that this is a website that I used. The name of this website is Market Structure. I use it in order to determine, in order to visualize imbalances when it comes to supply and demand. And take a look at Nvidia, guys. So on top of this chart, you guys can see the demand. It is clearly rising. The demand is this blue shaded region that you guys can see over here. And the supply or sellers, remember, demand buyers, supply sellers, the supply is decreasing and below average. This dotted line that you guys can see over here is the average. So what this market structure is telling me is that as of now, we have more buyers than sellers in the case of NVIDIA. And if we reconcile this chart, this market structure chart, with the technical chart of NVIDIA, it makes sense. NVIDIA went up today 1.47% and it closed the trading session at $446.88. So let me zoom in here. And yeah, the chart is looking very over here, an upward sloping 200-day moving average. We also have an upward sloping 100-day moving average. The bulls were able to recapture both the 20-day moving average and the 5-day moving average. And as of now, and if I zoom in a bit more, the 5-day moving average is actually rising. This is very bullish. This implies that in both minor and major time frames, the bulls are in control of NVIDIA. So the most important area that we need to keep an eye tomorrow is going to be 440, guys. 440 bucks happens to coincide with this upward sloping 5-day moving average and also with a previous resistance that acted as such in mid-June. This is, by the way, a previous support back from late July and also a previous support back from early August. So Nvidia closed the trading session today at 446 bucks. I'm thinking, guys, that any retracement, and mind you, obviously, um, the technical analysis that I am going to be providing you guys today is subject to whatever the markets do as a whole. So if the markets react in a very negative way to the jobs report tomorrow, then Nvidia is very likely to uh, retrace more than what I am going to be telling you guys over here. And if the report happens to come out, very reflecting exactly what the bulls need, and everything uh, goes higher or way higher, then Nvidia might go even higher than what I am about to tell you guys over here, guys. So the technical analysis that I am going to be showing you guys today is subject to whatever the markets do as a whole. That is something that is worth to be pointed out. So any retracement down to 440 bucks might be a buy the dip opportunity. If the bulls happen to be able to find support at 440 bucks, they could be bouncing back up and maybe filling this next gap up to 453 bucks. 453 bucks happens to be a previous resistance back from October 2nd. And let me see, this is also a previous resistance back from mid-August. So this would be the first gap that NVIDIA could be filling to the upside. And mind you, on the flip side, guys, if the markets open in the red and NVIDIA opens above this 5-day moving average, so above 440 bucks, and the markets start to drop as a whole, and the bears are able to break 440 bucks to the downside, then we have two potential gaps to the downside. The first went down to this 20-day moving average, 437 bucks, and below that area, we have a recent low at 429 bucks. But when we see the technical chart, everything looks bullish over here. So I'm thinking that higher prices are coming up for Nvda more likely than not. Can you share Meta? Absolutely, yeah. Sure, let's do it. Um, Eli Lilly. I have a request for Eli Lilly. Let me see. There you go. Alrighty, it went up today 1.89% and it closed the trading session at $541.48. Guys, if you detect any mistakes and stuff like that, you know that I do live stream for the guys of my Patreon throughout the whole trading session. So by the time that I am live streaming for you, I'm very tired. So, I am making here an extra effort. So if you notice some mistakes here and there, I do apologize for that, okay? But at this time of the day, I'm very, very tired. Okay. Um, wow, what a collapse for Eli Lilly, right? I think that the markets were pricing in, guys. By the time that Lilly hit 600 bucks, the markets were pretty much pricing in that Lilly wasn't going to have any competitors when it comes to the weight loss optimism, right? And guess what? Some competitors have shown up, and the markets didn't like it. So the stock of this company was pretty much priced to perfection, guys, when it hit 600 bucks. So we got news that we have some other companies already launching these kind of weight loss pills, and the markets were like, okay, so Lilly isn't going to be actually selling all of the pills of the world for those who want to lose weight. So let's sell out of it. So it dropped how much? Lilly dropped 14%, guys. It was a sizable loss, a sizable drop, sorry. And take a look at the spot in which the bulls managed to find support that, guys, 517 bucks. 517 bucks is a previous support back from early August that acted as such on two occasions. So they bounced back up, and today they were able. This was actually, guys, the spot that I was taking a look at today, because I did want to start the trade on Lilly. I was taking a look at this 5-day moving average, which happens to be downward sloping. The fact that this 5-day moving average was downward sloping, that implied that in regular market conditions, it was supposed to be a very tough spot for the bulls, but it wasn't. The bulls were able to recapture the level, and if they can consolidate tomorrow above $535, guys, this is bullish behavior, and that implies, or that could be implying, and you guys know that this is a very volatile stock, that the bulls could be gathering momentum in order to fill this next important gap up to $558. 558 bucks is a previous resistance back from September 22nd, and this is also a previous resistance that acted as such on multiple occasions back in August. So let's say that Lilly retraces down a bit, down to this 5-day moving average, 535 bucks. Let's say that we can confirm that that area is acting as support, because remember, guys, no support is support af- until after the fact. Let's just put it that way. So don't try to, or, and this is something that I have been telling you guys over here since I am live streaming for you. Don't try to guess areas of support. Wait for others to buy the dip so an area of support can actually act as such, and then you can buy strength after the dip. So let's say that Lilly retraces down to 535 bucks. Am I going to be buying the dip right at 535 bucks? No way, guys. I'm going to wait for Lilly to bounce back up from 535 bucks, and I would be entering the trade once I confirmed that that area actually acted as support. So I would be picking up either shares or calls of or Lily at around $538. From $538 up to this gap that I just told you guys about, near uh, $558, this would be a 3.46% profit trade. So, in my opinion, Lily is a tradable stock above $535, and the stock of this company is a no touch, losing as support this 5-day moving average near $535. Let me take a look at the market structure of Lily. Let me see. Eli Lilly and Company. There you go. Here it is. Let me see. Mm. Wow, the market structure isn't looking good at all, guys. Very poor market structure. Remember, guys, on top of this chart, you guys can see the demand, and at the bottom, you guys can see the supply. Demand buyers, supply sellers. Take a look. The demand collapsed. So buyers are nowhere to be found, and the supply or sellers is rising. So this is the pretty much, for the most part, this is the worst market structure that we can get. Buyers decreasing and sellers increasing. So watch out for Lily. If this support of $535 happens to be broken to the downside, the bounce that we saw from $516 could have been a dead cat bounce. Be careful over here. I have, let me see, Apple. Let's take a look at Apple. AAPL. Let me see, Apple. By the way, I closed Apple calls today, guys. I got December calls last week, and today, and since tomorrow we have the jobs report and stuff, I decided to close those calls with a $200 gain, I think. Apple went up today 0.72%, and it closed the trading session at $174.91. Let me zoom in here and take a look, guys. The bulls failed today right at this 20-day moving average, this downward sloping 20-day moving average. Again, this pink line that you guys can see over here. So ideally, if the bulls want to keep going higher, they would need to recapture, or they would need to burst above $175. And if they can close candles above the area, we would have two potential gaps to the upside. The first one up to $176. This would imply a small profit, but this is all $176 is also an important spot for Apple. $176 happens to be a previous support back from late August, and this is also a previous resistance back from mid-August. If they can also take out this area, $176, then they could be potentially being able to fill another gap, a second gap to the upside, up to $179. $179 happens to be a previous resistance back from late August. Um, Good day for the bulls. They were able to recapture this 5-day moving average. They failed at the 20-day moving average, but at least they are making some progress over here. The 200-day moving average is still upward sloping, which is encouraging for the bulls. And we have this head and shoulders pattern that we don't know if it is actually going to play out, but it could still play out if the bulls happen to break to the downside, if the birds, that is, happen to be able to break to the downside, this upward sloping 200-day moving average near $166. So in my opinion, guys, a no touch below this 5-day moving average, below $173. And ideally, the trade that I would be interested in over here would be Apple holding as support $175 ish, and maybe pushing or being able to make another push to the upside. Let me take a look at the market structure of Apple. Let me see, AAPL. AA, there you go. All righty. So what do we got? Demand and supply. Um, the demand collapsed. It started to recover, but now, but as of now, it is decreasing relative to the supply, and the supply is rising and about to burst above average. So Apple is guilty, guys, until proven innocent. So in my opinion, a no touch below 174 bucks ish. There you go. Another request. Can you cover Pfizer? Sure. Let me take a look at Pfizer. Did Square make another 52-week low today? I think that was the case, right? I have a loss on Pfizer, guys. I am holding a big bag over here. I purchased like 100 shares at 42 bucks, and guess what, guys? It kept dropping. It happens. So Pfizer went up today 0.48%, and it closed the trading session at $33.47. Guys, and I'm surprised that none of you is asking about Coca-Cola and I don't know General Mills and McDonald's. Most of the consumer staple stocks, such as Procter and Gamble and Coca-Cola and I don't know, uh, you know, uh, what else? I mean, Pfizer is not a consumer staple stock. Pfizer belongs to healthcare, to the healthcare sector. But most of the value stocks out there that you guys know and trade, like Pfizer and Procter and Gamble and Coca-Cola and McDonald's, and you guys get the point. Most of the investors that open position in that kind of stocks do it because of the dividend, because those are dividend-paying stocks. And guess what? Guess what, guys? Yields are very elevated as of now. So if you buy a 1-year treasury bond, you're being paid like 5%. So there is no incentive as of now. There's no a practical incentive as of now in order to buy these kind of stocks. Take a look at, for instance, Coca-Cola. Take a look at this disaster, guys. Take a look at this. Brand new 52-week low for Coca-Cola. Let's take a look at Procter and Gamble. Most of these stocks look very bad as of now. Take a look at Procter and Gamble. Another disaster. What other? Take a look at General Mills, guys. These guys sell cereals. Very good company, a very well-run company. But take a look at this disaster. So as of now, we have, uh, the competition that we have when it comes to a yield that you're being paid because of an investment from the bond market is terrible. So most of these stocks, while yields remain elevated, and I was telling you guys about the 10-year treasury yield about TNX. So as long as yields remain elevated, most of these stocks will not recover anytime soon. So keep that in mind. If you want to take a trade on Pfizer, this is another stock this is a stock that actually belongs to the healthcare sector that most people buy because they just want to earn a good dividend. But with yields, with treasury yields being so elevated, there is for the most part no incentive in order to buy Pfizer. So this is a major downtrend. We can see over here the downward sloping 200-day moving average, downward sloping 100-day moving average. So most of the moving averages are downtrending as of now. If I zoom in, however, we find an encouraging sign, which happens to be the 5-day moving average. Again, this white line that you guys can see over here, which happens to be upward sloping. This is positive for the bulls. However, Pfizer closed today's trading session at $33.47. So the bulls closed below this upward sloping 5-day moving average. I wouldn't touch this stock unless I can see some sort of consolidation above this 5-day moving average. So some sort of consolidation above $33.60. A no touch by any stretch of the imagination below $33.60. If the bulls can consolidate above $33.60, we could be talking about two potential gaps to the upside. The first one, $34, and the second one, a previous support at 35 bucks. $35 happens to be a previous support back from mid-August, and this area around 34 bucks is a previous resistance from 2 or 3 days ago. So not a good looking chart, guys. I would stay away from Pfizer as long as I just told you guys, treasury yields remain so elevated. On the flip side, guys, if we happen to see the 10-year treasury yield dropping like a rock and stuff like that, I think that a bunch of market participants might be picking up Pfizer. That would be a good signal in order to start the trade on Pfizer. Let me take a look at the supply and the demand of Pfizer. Let me see. PFE Pfizer. and the demand is starting to rise little by little, but yet still the supply is way above the demand, and the supply is rising and above average, guys. So I'm thinking that this push to the upside might be another dead cat bounce like the ones that we have been seeing recently in Pfizer. And I am not a trader of downtrends. I rarely ever trade downtrends. So Pfizer is simply guilty until proven innocent. This is a stock that I would stay away from, even though I am holding the back. Let's keep going. Meta. Fishman is asking Meta. I day traded this ticker today, guys. By the way, holding 300 bucks. I ended up making some bucks over there. Um, let me see. It closed lower today, not much. It pretty much closed flat, guys. It went down 0.26%, and it closed the trading session at $304.79. Let me zoom in here. This is a good looking chart, guys. We have an upward sloping 200-day moving average, upward sloping 100-day moving average. And if I zoom in here, the bulls closed today's trading session above both, guys. This semi-ascending 5-day moving average and also above the 20-day moving average. So, in my opinion, the trade that I was thinking about tomorrow would be Meta holding as support. And let me zoom in a bit more here. Let me see. There you go. I would like to see the bulls of Meta holding $304 as support. At 304 bucks, we have the convergence of the 5-day moving average with a previous resistance back from September 22nd and also a previous resistance back from September 5th, which happens to be my birthday, by the way. If anyone wants to send me a present. Okay, let's say that Meta, if let's say that you guys happen to see Meta closing candles above 304 bucks, that could be signaling that the bulls are gathering momentum in order to potentially being able to fill two gaps to the upside. The first one, 308 bucks. 300 bucks happens to be a previous resistance back from early October and also back from mid September. And we also have a second potential gap to the upside up to 313 bucks. So from 304 bucks ish up to the first gap, 300 bucks, you guys are looking at a 1.35% profit trade. And up to the second gap that I just told you guys about, 313 bucks, you guys are looking at a 3% profit trade. This is a good looking chart. And I think that this is going to be a beneficiary of a positive reaction of the market tomorrow to the jobs report that comes out at 8:30 a.m. Eastern Standard Time. The trade that I started today was at 300 bucks, guys. And why did I started that trade at 300 bucks? Well, because 300 bucks acted as support yesterday, and this is also a previous support back from mid-August. So we can make the case that if this 5-day moving average happens to be broken to the downside tomorrow, maybe the bulls of Meta could be being able once again of finding support at 300 bucks. So this could also be a potential trade on Meta tomorrow. I would be able to take this trade as well. Okay. So these are the two spots that I am going to be keeping an eye on Meta tomorrow. Let me take a look at the market structure of good old Meta. Meta platform. Let me see. Let me take another zip of Sprite, guys. Sorry. Mm. We have a tie over here from a supply and demand standpoint. So the demand is stable, which is a good sign. And the supply is rising, and it is as of now above the demand. But buyers are stubborn, guys. They are there. That's why they keep buying the dip at 300 bucks. They are saying like, "Hey, we aren't going anywhere, so let's keep buying the dip." Meta is another stock that, in regular market conditions, because we don't know if they are going to pull the rug out tomorrow, because the jobs report happens to come out either way overheated or way below estimates. But if they don't pull the rug out based on the jobs report, I think that Meta has an appointment with higher prices, most likely. Super microcomputer, the beast. What a beast, guys. The stock of this company is a beast, literally. It goes up today 2.57%, and it closed the trading session at $287.60. Um, in the last few days, guys, the markets have been dropping. And guess what? SMCI has kept going higher, regardless of whatever the markets as a whole do. This is what we call in the trading parlance relative strength. So the net aggregate opinion of the markets is saying, I don't mind what is going on with the markets as a whole as of now. I am buying super microcomputer. That is very, very positive, guys. Take a look. Um, from September, let me see, from September 21st and to this date, SMCI has gone up 26%, whereas the SPY, I said, guys, December 22nd. Let's reconcile this with the SPY, or the SPX is the same thing. September 27th, we said, right? 22nd. Okay, SMCI has gone up 26%. During the same period of time, the S&P or the SPY has dropped 2.30%. That is the perfect definition of relative strength. Very good job for the bulls of SMCI. So let me pull up the chart once again. And upward sloping 200-day moving average, upward sloping 100-day moving average. The 5-day moving average is obviously upward sloping as well, because the stock of this company has been going on an absolute tear recently. So I'm thinking, and let me zoom in here, if the bulls are able to hold as support this 5-day moving average near 280 bucks, we have two potential gaps to the upside. I always like to talk about two potential gaps to either the upside or the downside. The first gap to the upside is going to be 292 bucks. This is a previous area of overhead resistance at which SMCI felt 2 or 3 days ago. And if the bulls on good volume and momentum can burst above 292 bucks, then SMCI could have an appointment with 305 bucks. This is a previous resistance back from August 24th. My audio, okay, there you go. Nothing to complain about this technical chart. It is looking extremely, but extremely good. And unless they pull the rug out, as I have been telling you guys, SMCI is definitely going higher. Um, this would be my trade. A retracement down to the 5-day moving average. If I happen to confirm support after the fact, remember, a support is a support after the fact. So if I happen to see SMCI retracing down to 280 bucks, and if the bulls happen to be able to bounce back up from this area, I would be entering the trade at around 283 or something like that. Remember, don't buy the dip, buy strength after the dip. And if that were the case, up to 290 bucks, this could represent a 2.60% profit trade, and up to 304 bucks, this could represent a 7% profit trade. What a beast of a stock. Beautiful. Let me take a look at the market structure of SMCI, super microcomputer. Daniel, bro, we already went over both stocks, Tesla and Apple. Yeah. So you just need to rewind a bit the stream, and you're going to see the technical analysis of both stocks because I already covered them. Take a look at the market structure of super microcomputer, guys. Take a look at the demand through the roof. Through the roof. Take a look at this. Remember, this blue shaded region represents the demand, buyers. And at the bottom of this chart, you guys can see the supply or sellers. So sellers are walking away from the stock, or I would say running away, because they are losing money, um, shorting the stock of this company. And take a look at the demand through the roof and rising. Beautiful. SMCI. Okay. What other requests? How long are we? Let me see, guys. So we have been okay. We are 49 minutes in. My audio is still working. That's good. That's a good thing. Okay. AMAT, Applied Materials. Did I do AMD? I haven't gone over AMD, right, guys? No, I haven't done AMD. No. Let me take a look at advanced micro devices. Goes down today 1.11%, and it closed the trading session at $102 and 91 cents. So we have an upward sloping 200-day moving average, and the bulls were able, guys, to defend this spot, to defend this moving average, sorry, guys, which happens to be a very important moving average recently at $95 ish, approximately. We have an upward moving average. Let me zoom in here. Is my audio still working? I hope so. Yeah, it is working. There you go. So we have an upward sloping 5-day moving average, but the bulls weren't able to close today above $102. Actually, AMD got killed today as soon as the trading session opened. I can recall that. So we are seeing encouraging signs, but I need to see AMD closing candles above $102.50. And get this, guys. This upward sloping 5-day moving average at $102 approximately happens to coincide with a previous support back from mid-August, and this is also a previous resistance back from mid-May. So AMD closing candles above $102 could be signaling that the bulls are gathering momentum in order to fill two potential gaps to the upside. The first one up to $106, they failed at this area a few days ago. And the second gap would be up to this upward sloping 100-day moving average at $110. So from $103.40 ish up to $105, this could be representing a 1.6% profit trade, and up to this upward sloping 100-day moving average, we are looking at a 6% profit trade. So this could also be a beneficiary of a positive reaction of the markets to the jobs report tomorrow, but the bulls of AMD need to remain trading above $103, so above this upward sloping 5-day moving average. Let me take a look at the market structure of AMD. Supply and demand. What is it looking like? Let me see. And I will go over applied materials, 5:27 p.m. Okay, check this out, guys. Very encouraging market structure. The demand is rising in a very aggressive fashion, I can say, and the supply is decreasing and below average. So if we reconcile this market structure with the technical chart that I just showed you guys, this is the reason why we have an upward sloping 5-day moving average, even though the sellers were making progress because they were able to break to the downside the 100-day moving average. So, yeah, holding $103 as support, this could be a long trade, in my opinion. Applied materials, AMAT. Let's go ahead and take a look at applied materials. It closed flat today, and it closed the trading session at $139.28. We have, yeah, this chart is kind of similar relative to the chart of AMD because we have an upward sloping 200-day moving average. The bulls are trading below this upward sloping 100-day moving average. We can make the case that AMD is way below its 100-day moving average relative to applied materials. And the 5-day moving average is starting to rise, which implies that buyers are once again making progress in minor timeframes. So I'm thinking, guys, that if the bulls of applied materials can burst above this upward sloping 100-day moving average, and I am going to draw a line over here, let me see, at around $140, they would be bursting above an important level because over here we have the convergence of a major moving average such as the 100-day with a previous resistance back from mid-September. So AMAT consolidating above $140 could be signaling that we have at least one gap up to $143. $143 is a previous resistance back from mid-June. From $140.50 ish up to 143 bucks. This could represent a 1.50% profit trade. So yeah, this would be the trade that I would be thinking about. Applied materials. Another possibility would be the bulls losing this area at around 140 bucks as support and paying a visit down to the 5-day moving average at 138 bucks. If that moving average happens to act as support, that could be bouncing back up. So this could be another potential scenario for AMAT. Let me take a look at the market structure of applied materials. Let me see AMAT. What do we got over here? And take a look, guys. Higher prices are coming up for AMAT more likely than not, unless they pull the rug out. You guys already know what I am talking about. We have an ascending demand and a decrease in supply. So we have buyers stepping in and we have sellers walking away from this stock. So above 140 bucks ish, I am a buyer of applied materials. Exactly, STZ took a smackdown today, Diamond. Let me take a look at STZ. What stock is that? STZ. Constellation Brands. Yeah, I think that they lowered guidance, right? Yeah, it dropped 3% and it closed the trend session at $241.33. I think that Constellation Brands ended up affecting General Mills, I think. And this chart is about to be 100% broken from a technical standpoint if this 200-day moving average, which happens to coincide with the 100-week moving average, happens to be broken to the downside. So not a good looking chart, guys. Yeah, we can make the case that maybe the bulls are going to be able to find support at 240 bucks, right at this 200-day moving average. But over here, we can see how the birds were able to break to the downside, the 20-day moving average, the 100-day, and also the 5-day. So, in my opinion, Constellation Brands break 240 bucks ish to the downside. This is a short, guys. I would be shorting this stock with both hands if this support happens to be broken to the downside. If you wanna go long Constellation Brands, then just keep an eye on 240. If this level happens to act as support, we are talking about a previous support back from early June. So from 240 bucks, 240 bucks up to the 5-day moving average at $248, this could represent a 3.4% profit trade. But I don't know. I think that they lowered guidance, guys. Let me see. Morella continues to win over Bud Light. The brand raises profit estimate and strong demand. So these are the guys that sell Modelo, right? Or Bud Light, Modelo. Um, I don't know. Some bad news came out, guys. I think that they lowered guidance, but I mean, I don't have the exact information over here. Okay, guys. Uh, we are how long in? We are 58 minutes in. I think that we can call it a day over here, right? I am going to wrap it up. I'm a bit tired, guys. Guys, it's been a long day for me. If you don't mind doing me a favor, please go to my channel. You guys know that the comments that you drop during the stream, those comments then do not become regular comments of the stream. You guys know that I am live streaming exclusively for you as of now, exclusively for the community of Chris Sane. But once I'm done streaming, I am going to release this live stream in my YouTube channel. So if you don't mind going to my YouTube channel and dropping a comment and hitting the like button and stuff like that, that is a favor that I am requesting from you after having been streaming for you for 1 hour, after having been streaming for the guys of my Patreon for something like 7 hours. So thank you very much for joining me once again today. Tomorrow is going to be a big day, guys, with the jobs report of September coming out. And I'm going to be calling balls and strikes as usual, per usual, on Discord. So take care, and I will see you guys later on today. Okay? Thank you very much, guys. Enjoy the rest of your day. Bye. Thank you. Bye-bye. Take care. Bye.